Well, indeed, we have two very interesting conversations today. But let's start with the first one. With inflation showing a consistent downward trajectory for 5 consecutive months, oil production rebounding, foreign reserves strengthening, and gross domestic product accelerating, the Monetary Policy Committee opted to slightly ease monetary policy. Specifically, the MPC reduced the monetary policy rate by 50 basis points to 27%, adjusted the standing facilities corridor to plus 250/minus 250 basis points, introduced a 75% cash reserve requirement on non-TSA public sector deposits, and kept the liquidity ratio at 30%. Now, this decision is significant for several reasons. It signals cautious optimism by policymakers who, while satisfied with macroeconomic improvements, remain wary of latent risk such as excessive liquidity in the banking system, lingering fiscal pressures. Moreover, the move underscores the CBN's balancing act, consolidating the disinflationary momentum while cautiously supporting economic recovery in an environment of fragile global and domestic uncertainties. A lot to unpack in this introduction, but my guest is Mr. Ogbonna Okuku. He's an investment analyst, an economic development expert. He joins me via Zoom from Abuja live. Thank you so much, Mr. Okuku. It's good to have you on the show.
Thank you so much, Tolu, for having me.
Great stuff. I think we should take it up from the fallout of the last MPC meeting and expectations for the November meeting. Some would say, following that move by the Apex Bank to reduce rates or to ease pressure by 50 basis points, that it is expected that they would stay on that pedestal and continue to reduce the rates as we move on in 2025. What are your views with regards to you? Because I know you've been monitoring the MPC, or you always monitor the MPC. So with this move, what do you think would follow?
Obviously, you can see by that move, looking at the indicators, it's quite clear that it was the right decision. And of course, the debt servicing burden has also reduced by significantly by that move. So states, federal government, debt burden has also, that has actually eased off a bit based on the fact that the interest rate has reduced. And then lending has also been, gone to the private sector, which what everybody, which they have always, the Manufacturers Association and the rest of them have also clamored for, so let there be a reduction. But the key thing is with the holding of rate, did it help in any way to help curb inflation? Yes, it did. But would there be a time when reduction will come? Which it came, from the last MPC meeting. And for me, going forward, I think the reduction has started because looking at the variables right now, things that we can see, the reduction didn't shake. Didn't shake the environment, the economic environment. So it means that we're on the right path. So it has come to stay. So the growth has come to stay. So I mean, I expect more reduction, but we are going to be doing that, minimally to get the feelers, from the economy before you plunge the economy into negative growth, into anything negative. Let me just put it that way.
It's interesting, but you know that some will still say the Apex Bank is trying to tread cautiously because, they won't just want to slam it on us, like maybe a drastic reduction in the monetary policy rate, considering what we've seen in recent times. But with the present economic indicators, inflation has been dwindling. That was in my introduction. We also see GDP figures looking very promising. I want to ask you, looking forward for 2025, what are your expectations for other numbers we'll be seeing as we move along the last quarter of the year?
Now, looking at it, because I mean, December is around the corner. So, I mean, traditionally, you know that there's going to be a lot of spending in December. And because of that,
Dirty December, we're expecting
the
that too.
dirty December. So we're expecting that. And then the good thing is Naira is stable now. I mean, Naira will still sell between 1,500 to 1,550. And then again, with the diaspora inflow that will come with the dirty December and then the normal traditional spending that happens in Christmas with diaspora inflow, you know, that will help stabilize the foreign market, the foreign currency market. So, but I mean, we expect, you know, the headline inflation to still remain, you know, just it will stay stable. And then, of course, by the next MPC meeting, I expect another cut in rate, maybe another 50 basis point cut in rate, and that would, that would also, you know, help, you know, prepare for the December spending that is going to occur. So, having said that, I also have to also look at the fact that you also mentioned in your intro that you know, crude oil is still going to the production. We're ramping up in production, so stability in that environment. And again, I think it's just something that happens most of the time. The issues we usually have when it comes to production. There's always this stability that happens with production during the end of the year. I don't know why, whether, you know, think people just, you know, the saboteurs always go on holiday. So I think, you know, that's what they like to handle. So, but I think with the parameters we can see, we see there won't be much to worry about in this December. Prices, the headline inflation will not, some areas like the rice, the normal things that we eat, the staple food, the prices will still be will still be under control. And but it's just that when it comes to things that we import, the goods that we import, we expect, looking at the exchange rates, the foreign exchange market, those things will still come at a little higher cost until, you know, the lagging period of decision being taken, and then when it starts to, you know, reflect in the day-to-day lives. I think it usually takes between 6 to 12 months. So I don't expect much to happen. But I mean, there's nothing to fear, you know, with the decisions that the central bank has taken to us.
So in your thoughts, are you also in tandem, or do you agree with that fact that we tend to have crossed that part of crisis and now we're getting to the part of growth and development, inclusive growth now in quote?
Yes, we have. You know, I think one of our economists said it, that we are just at the bend. We're just at the bend. So we've crossed that bend. So it is all the way growth, all the way. But it's just that we still need to do a whole lot, you know, to support the fiscal policy managers. You know, there's a lot that needs to be done in that area to, you know, so that this whole work that the monetary policy managers have been doing, you know, we'll begin to see more results as we move forward.
Now, let's think ahead and look at the focus of at the next MPC meeting. That's going to happen in November. We're going to be in November in a few days, and that will be the last for the year, if I'm correct. That will be the last MPC meeting for the year. My question would be, there are geopolitical concerns, which of course the central bank is always considering when they are reeling out their communique after the two-day meeting. Now, I'm thinking, what are those things, or what do you think would be topical, you know, around that table when that conversation starts? What are those things you think would be very topical and will be brought to the fore for consideration during this meeting, the November meeting or the MPC meeting? What are those things? Can we highlight some of them? Okay,
so we're looking at the tariff issue with the United States and other countries. I can see them beginning to have a sit down now. China and the US, the conversation is ongoing. So I mean, it goes round. It affect then the war in Russia and Ukraine, the war between Russia and Ukraine. Everything is beginning to pipe down. So I don't see a lot of tension, you know, when it comes to the supply chain disruption. So if we don't have such disruption within the supply chain ecosystem. I don't envisage so much trouble. I see a lot of people have gone on holiday, and then with that, the negativities have also, taken the backstage. So with that, I think it's growth all the way. So that's why I even had made a prediction that I expect that there's going to be an easing, from at the monetary policy meeting this time, maybe not so much, but another 50 basis points. So I don't see so much, going in the negative.
Now, before now, we know that the Apex Bank has, should I use the word support the economy one way or the other? At that time, they had projects around agriculture, projects around the creative sector, projects around so many sectors where the central bank was intervening before now. But the CBN led by Mr. Olayemi Cardoso has not gone that route. And we don't know if it's going to go that route. But my question to you really would be, what more ways do you think Central Bank of Nigeria, the Apex Bank, can support the fiscal side now to help, grow this economy? Because everyone will say you need two hands for proper handshake. You can't shake it or you can't clap with one hand. You need to clap with both hands. So what specific interventions do you think the Apex Bank can do more than what it's doing at the moment to stabilize this economy?
If you ask me, I think the Cardozo-led central bank now is trying to unbundle some of the far-reaching interventions that the previous government, in the central bank did. They actually bit more than they could chew, as far as I'm concerned. But are there interventions that are necessary? Yes, they are. I've always said it. When it comes to financial engineering, the central bank will always have the latitude to be able to create products that will support, especially manufacturing. So those products that are targeted at small and medium scale industries, knowing also that we don't have a venture capital system in Nigeria. So for me, I was even in a small conversation with one of the people, in charge of the finance in the central bank. So we had a robust conversation around this. So I know that they are trying to unbundle what had happened in the past that didn't go well, and then streamline to see how they can first things first recapitalize some of our the government finance institutions, making them understand what government finance is all about. So they need to understand, because if you must grow this economy at the point where we are, which is speaking to the fiscal managers, you must be able to strengthen those government finance institutions. We must create a venture capital system. We must have tailor-made strategic financial instruments that will support small and medium-scale industry, and then support those non-tangible, non-tangible, like the creative sectors, So those things, I know they are in the offering, but I think from the body language, I see that they are trying to be very careful, because nobody wants to have that kind of some stain on their name when it comes to creating products that would at the end of the day backfire on the economy. So so trying to curb inflation and then trying to bring that liquidity through that financial route, which is the more financial route, it has to be carefully designed. So I think that is what they are doing, and then by the time they do that, they're going to have a lot of support for the fiscal policy managers. But it's also key for me to mention at this point that I think the federal government on their own need to also look at what the subnationals are doing with the more resources they are making available to them. So I think with the model that we've used, a accountable funding model, I am not saying that if the federal government is receiving so much money that they should not, push to the subnationals. But I think conversations should be holding consistently on what those monies are for, so that we don't just encourage people's ego because they have more money at the subnationals. They just want to do projects for doing sake. The projects have to be tied to the momentum of the economic growth plan of the federal government. So if we're going towards raw material supply strategy, so if you're going to do an infrastructure to support a solid minerals, ecosystem, so there has to be that confluence. Like I always say, there has to be that sit down so that we know exactly where we need to support each other. So that the federal government, yes, you can see that the monies going to the state are now so much. So if we don't somehow have a conversation and manage these resources, we might end up, shooting ourselves in the foot because we have more money, and then the states are not doing projects that would align with the economic growth plan of the federal government.
Very, very, very important, even at this time where FAC seems to be on the high side, and some even say that more money for the states, and allegations in some quarters that they are changed into dollars, that also affects inflation one way or the other and affects the currency, the strength of the Naira. But almost finally, let's look at the strength of the Naira, which we see that in recent times is beginning to gain some positive traction, I must say. The gain of about 5 to 6 Naira again sometime yesterday. Today is still around 1470, around not up to 1500. In some cases, 1450. Some say we could even get to 1400. What do you make of that, considering, of course, another effort by Mr. Cardoso-led central bank to stabilize our currency? Do you think that we are getting to that point where the Naira, of course, will be appropriately priced?
Yes, Naira will be appropriately priced when we begin to have, design a program towards becoming productive. Now, Naira, we can print Naira, but we can't print dollar. We can only earn dollar. So, your ability to earn dollar is highly dependent on your participation in the global value chain, in the things you bring to the markets, right? So it comes back to the same thing I was talking about. So if the interventions which the central bank will usually design will be designed in such a way that it has to be strategically structured in such a way that those things we expend money on to import. For example, we don't have any business as a nation spending over $600 million on dairy products, cheese, milk, when we have cow. So, are there things we need to do? Are there some certain strategic investment we're supposed to do in the livestock ecosystem to make sure that the way Botswana has grown their own livestock ecosystem, we can actually grow? So that's kind of strategic investment I'm thinking of. And it has to be done strategically so that you don't throw monies into a pit, because some of these structures have been designed in such a way that you need a drastic change in ways that people do things. For example, you can't have a cow trek from Sokoto to Nsukka and that cow lactates. The cow cannot lactate. It's not possible. It's only a cow that is ranched that can bring out milk, that you can produce cheese from, that you can produce milk from. So it's just a normal, so it's a concept that has to do with the re-engineering of people's way of thinking, redesigning the business angle of things, and then providing that financial structure that is required. That's just on dairy. So fish we have the same issue with fish. We're still importing a lot of fish to feed. So are there certain products we can use to design to support? So these things are things we need to think about, which is why I think the Cardoso-led central bank is actually being very critical in designing this product so that we don't fail at it at all, because they have done well in trying to manage, to stabilize the economy. So they wouldn't want to throw out liquidity that will go south, and then that now becomes a problem at the end of the day.
All right, then let's now have an outlook as we wrap up for the general economy, particularly as we expect the implementation of a tax laws by January 2026. That's also a big one. Everyone has been coming. There's been back and forth in regards to the companies gain tax and all. But generally, what do you make of the implementation of this very important document as we move to 2026 and your outlook for the general economy?
Yes. Okay. Let me start from the tax law. The new tax law that is going to be implemented from January. For me, I've always said a better country would only be born out of, citizen participation. Now, I've also noticed from research that countries that you have higher, where you have larger people in the tax net, are more politically aware than countries that you have people in, you have less people in the tax net. So what that simply means, I'll give you a very simple example. A taxi driver that took me from Dulles Airport in Aberdeen many years ago had a conversation with me as he was going to drop me in my house then. And then in our conversation, he brought out a letter that was written to him by Gordon Brown. So with that letter, I saw something that was very key. And I asked him, why would Gordon Brown write you, a taxi driver? He said, Gordon Brown would definitely write me because I am a citizen and I'm a taxpayer. So, and if you notice, they always say that in the UK government, they run their economy with taxation. So what it simply means that from January, more people will be in the tax net. With that, citizens' participation will increase when it comes to elections, when it comes to being aware. Look at Lagos, for example. People are more aware in Lagos on what is happening in government than in any other place. I mean, anybody can prove me wrong. But the point still remains that when it is our money and when it is my money, they are two different things. So what the present administration is doing is actually opening the nation to a position where people will now be asking more questions regarding what is being done with their resources. And with that in mind, I think is the right decision. And I think, yes, the information is flowing. Everybody's understanding exactly what that is all about, who should pay, who shouldn't pay, what threshold will begin to pay, and all of that. But I always hold this conversation and I say, we are in for the best moment of our lives. Maybe this is that time that we have been waiting for, that Nigerians will begin to now pay attention to what happens to their money. Before, it used to be Niger Delta money or our money, but now it is my money. So when money goes out of your pocket, you will be aware.
All right, then. I think it's a good way to leave it. Mr. Ogbonna Ukuku is an investment analyst, economic development expert. Thank you so very much for your time on the program. Nice conversation, I must say. Do enjoy the rest of your day.